In today's video, I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now, I do post these videos up daily, so I highly encourage you to double check the latest video on my channel, so that way you get the most up-to-date information, because information does vary day by day in terms of the charts could flip and so on and so forth. And before I look at the charts, I'm going to go to the economic calendar. And on Monday, September 23rd, 2024, at 8 a.m., we have Atlanta's Fed President Raphael Bostic speak. At 9:45, we have S&P Flash U.S. Services PMI, as well as S&P Flash U.S. Manufacturing PMI. And then at 10 a.m., we have Chicago Fed President Austan Goolsbee speak. And at 1 p.m., we have Minneapolis Fed President Neel Kashkari speak as well. Now, you should also be aware that by the end of the trading week on Friday, September 27, 2024, at pretty much 8:30 a.m., we have a lot of data points in terms of CPE inflation numbers. Now, PCE inflation numbers. These PCE inflation numbers are highly regarded as more accurate in terms of the Fed versus the CPI and PPI inflation numbers. So the Fed looks at these numbers as more accurate inflation numbers, and they for the most part, look at the core PCE inflation numbers versus the non-core PCE inflation numbers. And the core PCE inflation numbers just have energy taken out because, in a way, energy is pretty volatile, right? Now, there's been times that they look at the PCE inflation numbers more versus the core PCE in terms of, I would say, the media looks at it that way. So if the PCE inflation numbers come in better than expected, but then the core PCE is like pretty much even or slightly above, they'll pretty much boast this. At least that's in my opinion. Again, this is all just my opinion, so please do your own due diligence and research before buying and selling. And in terms of core PCE year over year, which is the biggest one that they're going to be looking at, it came in at 2.6 previously, and then this time around they're expecting 2.7, so a slight increase. And then in terms of PCE year over year, so we'll have energy in it. Previously 2.5, this time around they're expecting 2.2. I'm pretty sure the media is going to spin this off as better and showing that inflation is getting reduced. So there's that. And then there's the month-to-month comparisons, but these are the bigger ones in my opinion. Now, in terms of the charts, if you're looking at the MAC lines, so I'm going to show the 1 years. So I'm looking at ETF, SPY, ETF for the S&P 500. Same thing, just different ratio. It closed at $568.25. And if you look at the 1 year MAC line, so in case you're new to the channel, MAC line indicates if you're in your bearish or bullish movement. Currently in the bullish movement, pretty much got stronger. Volume has increased and became a green candle, so that is positive. And for the most part, in terms of S&P, Nasdaq, and Dow Jones, they are showing more upward, more upside coming, right? And I'm basing that off of personally being above, for example, the 50-day moving average in terms of like the 1 year, 5 year, and the all chart for the most part for Nasdaq, Dow Jones, and S&P, plus the MAC lines indicating more upside. Now, will there be downsides? There will be pulls? Yes. And I want to show one level for the Nasdaq as well, because that is very important. Because hypothetically, if we were to come down, because there's technically a level that I'm thinking that could be a false breakout and then end up getting pulled down anyway. I'm going to show that, but just to visually show first. 1 year chart, MAC lines green. 5 year chart, it's about to cross over, but very close. And this is one of the reasons why, in my opinion, we could get pulled down, right? The reason I'm stating that is, for example, MAC line earlier back in August 26, 2024, basically estimated time frame could have been the day before, day after, where it could have potentially crossed over, but yet got pulled down. So doesn't mean that even though it's close to crossing over, it'll guarantee crossover. It could get pulled down nonetheless, and it did. So pretty much after that time frame, you can see a huge red candle got pulled down. And if I zoom in, it's more detailed, but right now it's zoomed out, right? And then the all chart, they're all pretty much showing the same thing. It's pretty much 50-50 still in terms of more upside, more downside. I will say for the S&P though, and then the Nasdaq's a little bit different, but there's upward trend resistance line dating back since 2010. And then upward trend support levels, 2 levels. This last one has only 2 touch points, but if we ever have a major crash, I'd be relying on this last touch point to hopefully support us. We'll see. Nothing's guaranteed, obviously. But the reason I'm showing this is within these 2 channels, resistance and support channel, there is more room to the upside for the S&P. So there's that. But we're in the mid zone, and it's not like we have to go up to the upside. There's been times we were in the mid zone and still dropped down to the support level. So there is a chance for that. But overall, the indications are still more pointing to the upside. For the time being, in terms of like trading weeks and give or take and all that stuff, or days only possibly, right? Again, the data always changes, so anything could happen. But in terms of the short term, there could be, like, for example, down days, obviously. So it's not just going to be straight up days completely. The one thing I want to show on the Nasdaq and the level we're at and all stuff, which is very important in my opinion, is actually, just before we get to that, I'm going to show the MACD lines for the Nasdaq as well. 1 year chart, bullish movement as well, so showing the exact same thing. 5 year chart, pretty much close as the S&P, about to curve up, but again, we've seen that times where it's trying to curve up and got pulled down just like the S&P. Doesn't mean it's going to be guaranteed to go upside. And the alt chart, pretty much 50-50 as well. But what I want to show for the Nasdaq, and I probably should show this as well too, so I apologize for this, but upward trend resistance line dating back since 2010, because this is the important part. If I don't show this part, you won't understand what I'm not understand, but you won't see what I'm seeing. Upward trend resistance line dating back since 2010. Every time it went up, it got knocked down. Mind you, the market was still going up. It doesn't mean it wasn't going up, but every time it went up, got knocked down, except through 2020 to 2022, came back underneath, had issues passing it, and then this is where basically at. We did have a breakout in July. The whole entire market was up during that time frame of 2024, but then we came back underneath the 2010 upward trend resistance line. Mind you, by the way, another reason why potentially this could play a big role is the S&P and the Dow Jones are all-time high territory / zones. They're at the all-time highs. The Nasdaq is the only lagging one that's not at all-time highs. The all-time highs was back in July of 2024, which the S&P and Dow Jones had previous all-time highs in July as well. But Dow Jones and S&P ended up passing that July all-time highs and is currently creating new ones, right? The Nasdaq is the only one. And then this is the line, upward trend resistance line dating back since 2010. And look, we're still underneath it. We did try to test and break through back in August of 2024, late August or mid to late August. Did have a false breakout actually, but unfortunately just ended up coming back down still. Now the question is, are we going to pass it this time around? And then again, it doesn't mean that's just going to go straight up. We are close to it. So for example, I'm looking at ETF QQQ, ETF for Nasdaq, and it closed at $482.44. And if you're wondering what that level is, it's looking at pretty much $489 and some change. I would say $460 to be honest, because my lines are obviously not perfect. So $490 and some change. And then we could probably end up getting to this zone anyway, which is probably going to be $491. Yeah, almost close to $491 anyway. So I would be expecting a false breakout personally anyway, regardless. And then the question is, are we going to go higher to the previous all-time high or get pulled down? Hypothetically, if you're just going based off the trend lines, and not trend lines, in terms of MACD lines, technically this should not be a problem. But the thing is though, in my opinion, because we're at all-time highs for the S&P Dow Jones, plus we're approaching a pretty important level dating back since 2010, like I stated, like you can see this line is pretty strong line where it's caused issues passing multiple times, right? So I don't know. The Fed did cut interest rates by 50%, so that is enough catalyst in a way based off of that with the MACD lines to break through. Should not be a problem. And you could argue we probably might start trickling down once we hit the previous all-time highs, which is pretty much about $504, $505, and then we probably start heading down. Again, MACD lines are indicating more upside. And then we're pretty much above the 50-day moving average in terms of all, like 1 year, 5 year, and all charts and all that stuff. So more upside is expected, just FYI. I'm just stating that levels that could cause issues where maybe then we start pulling down, right? Because of the fact that the S&P and Dow Jones are all-time highs. The Nasdaq is close to the all-time high, and then we're at important levels, for example, dating back since 2010. So there's that. If you like the video, consider dropping a like. It does help with the channel, so thank you so much for that. I do appreciate it. If you want to be notified when I upload my next videos and all that stuff, consider following, subscribing to be notified when I do. And that's it. Thanks again for watching. Appreciate it. Take care. God bless, and peace.